Let's get all of that aspect of the equation of this election. Let's go to Joe Lynam. So what is the thought from the city, Joe?
Overwhelmingly positive, Matthew. You wouldn't be. I think a lot of people were shocked at the spike upwards in a lot of securities and types of investments in the City of London. As you said, uncertainty is seriously persona non grata amongst the markets. What they also really want is stability. They thought they would get a hung parliament. Nobody expected the exit poll to be as it was at 10 p.m. last night UK time. But here's what the markets did. Let me have a quick look at the price of sterling, the pound sterling against the US dollar. Here is when the exit poll was published at 10 p.m. UK time last night, a massive spike upwards against the dollar, and it continued to grow as it became increasingly clear that the Conservatives would not only gain the most seats, but would almost certainly form a majority government. Let me show you another little chart here. Here is the FTSE 250. This is a wider benchmark of the UK economy. The FTSE 100 is deemed a little bit too global, not necessarily representative of the UK economy. It is a C, it is a pie chart of green. The markets like it, especially in the banking sector, the energy sector, the utility sector. They all love it. With me now is a gentleman who knows a little bit more about this than I do, Richard Jeffrey from Cazenove Capital, part of the Schroders Group. Were you surprised when you saw the exit poll at 10 p.m?
I think we were all surprised by the exit polls, given that we'd looked at opinion polls for weeks now showing either a small Labour lead or a small Conservative lead or tied, even the day before the event. So yes, the outcome was a huge surprise to us.
I mentioned some of the sectors that did very well. Banking. Give us a run through of why some of the big banks like Lloyds and RBS are having a very good day in the stock markets today.
Well, a number of sectors in the market had seemed to be threatened by some Labour policies. So taxes, increased taxes on the banks was one area. The threat of greater regulation within the utilities sector had held back utilities, and also the impact of some of Labour's policies, potential policies, on the housing market had held back house builders. So these sorts of areas have rebounded very strongly.
When you say utilities, you mean some of the energy companies, like, for example, oil and gas exploration companies, Centrica. They were a bit worried, weren't they, that there would be a price cap imposed upon them by a Labour administration?
Yes, companies like Centrica, but more widely the electricity companies and the gas companies, yes.
Now, I looked at the sterling dollar rate, the pound versus the dollar rate. Why have people suddenly started buying pounds in response to a Conservative administration? What's going through their heads?
Well, I think a lot of international investors have been holding back from the UK because of uncertainty over the political situation. Now that's clarified, we should see stronger flows, capital flows, coming back into the UK economy. Some of those flows will go into financial markets, so into government bonds and to equities. Some of those flows will also go into real investment in the economy. And one of the areas that uncertainty has damaged, I think, over the past 6 months has been capital investment. And we've seen that through a slowdown in growth in the economy.
Superb. Richard Jeffrey there, thank you very much, from Cazenove Capital. The one thing that has not been answered today, in fact it's opened up today, is of course an EU referendum. The markets are a little bit worried that the Conservatives will now hold the referendum and it could be lost, and that question mark will need to be answered in the coming months. It could affect investment into the United Kingdom in that time. Back to you, Matthew.
Joe, thanks very much. And Joe, absolutely right.